G'day traders, mindset reset. It's Thursday, day 2 on the backside of the week. So today I'll answer some questions, and today mindset reset, I'm going to talk a little bit about my own approach each day. A lot of questions about daily process, daily routine. I really want to emphasize to traders the importance of simplicity and laser-like focus and understanding exactly what you're looking for. Yesterday I did a video and really wanted to emphasize to traders the importance of understanding levels, because the levels represent the daily time frames. And there's a lot of mixed information. Traders are getting caught into the minutia, the smoke and mirrors, the matrix, the pushes, the gaps, the sweeps, the hunts, the candles, all these things, and they're missing the bigger picture. Signals, signal days that help us identify candidates for parabolic best trade candidates. Ones that can offer us not only range expansions, but range reversals for a daily range. Those are the scalable opportunities. Rinse and repeat, trap and shift, pump and dump, dump and pump. Now there's a couple things that I'll talk about. Number one, now I've said this in previous videos, I'm long biased the US indexes, long biased the US indexes. Now understand what that means. If I get a backside high of week monkey hammer template, I'm going to be looking to load the boat and short the indexes. But in the meantime, I'm looking for buy low opportunities. Now, if I can't buy low and it's a buy template, a trap and shift, dump and pump template, I'm still going to take the trade with the thesis that this market is still going to potentially have the strength to go up easier than it is to go down. Long biased, trap and shift. I still need to have a setup. Doesn't mean I just get in because I think it's going up. I still need to have the setup. Trap and shift, dump and pump, dump, coil and pump. And typically you're going to be looking at a minimum of 15 minutes after the open, 9:45. So how do I look at that? I usually narrow things down, and you know, I've talked about this with my screen. So I follow the Dow and the NASDAQ primarily, but I recognize that sometimes the Russell will go down easier than the other instruments. But when I bring one instrument up, I'll have a 1 hour, a 15-minute, a 5-minute, and a 1-minute chart on my screen, and there's nothing else I'm looking at. I'm just looking at that one instrument. And I'll encourage traders to shut off multiple charts and get focused. And when you're down to trading time, have everything else off. Shut everything off and be really prepared and focused, but pay attention to the time of day. The time of day and the levels and the template that you've identified on the day in terms of dump and pump, pump and dump, no matter what instrument that you're trading, whether you're trading Asia, London, or New York. New York indexes, the great thing about the New York indexes is that specifically at 9:30 each day, they open. Now I know traders sometimes want to get in at 8:45 or 9:05 or 9:15. But the beautiful thing about waiting for the 10 a.m. club, as we talk about, is that often there is pre-market moves, but the real trade comes later on. The real trade comes later on. And I want to say this again. If you rinse and repeat your approach, your process, your routine, and the setup, you can replicate that. If you're getting in one day at 8:45, one day at 9:05, one day at 9:45, one day at 10:15, it's all over the place. If you rinse and repeat things, it's not about trying to catch every move. It's about you being a constant in a sea of chaos. Like my friend Steven says, he's prepared to let markets take off without him if his setup doesn't present. Now that conflicts with most retail traders because they want to chase things that are moving and catch that move. I caught that move. Great. But what's the setup? Now, a lot of people don't like that. But my approach is this. It doesn't matter what other people think or like. It's what rinses and repeats that makes me a lot of money. The next part of that is making sure that you, the trader, aren't jumping around every day doing different things, chasing things, and being a variable. Because the market only does 3 things every single day on multiple instruments. It breaks out, it pulls back, and it trends in either direction. It breaks out, it fails, and reverses in either direction. Or it just chops back and forth in a trading range, which can still offer traders opportunities if there's a setup. Now, if you don't know what your setup is, that means you're going there every day to trade the markets. Now, if you're trading one market, you may have the expertise and the skill that generates you the income that you're after based on your trading skills, your experience, and your results. But here's the conflict that's in most traders' brain. They think the market is the challenge, when in reality, it's their own behavior, their own beliefs, their own daily approach, their daily routine, their emotions, their impulse control or lack of impulse control. There can be no edge in the market, but because traders are posting they've got trades in Asia, they got a trade in London, they traded the Euro CAD, they traded the pound yen, they traded the DAX, they got all these pips and made a ton of money. And then the US market's open and they take off and traders are posting their results and traders are like, I didn't get a trade. So they sit around looking for trades to catch a move. And sometimes you will catch a move and make some money. And other times you will get caught into a market that will make you spiral out of control, average into a loser, or try to get even, get revenge, get back to the high water mark, get what you lost back, or do crazy things and blow your trading account out. The trader is the biggest variable. So when people talk about how, markets, nothing new, this is go back to the source and go read this, go read that. My challenge to you is sort out yourself and make a decision that you're going to stick with 1 or 2 money-making setups on any instrument, or one instrument, your favorite instrument. And recognize when you shouldn't touch a market, when you should be away from the hot stove, or when it's just not a market that you can interpret to trade and there is no setup or no edge, and walk away. Now that challenges a lot of traders because they're addicted to trading. And they think that catching moves is going to be the solution to whatever their issues are, their problems are. It's going to solve all their wants, needs, and desires. Instant gratification. If I get a trade right now, it's like crack. They want more. They want to go back and get more. They can't stop themselves. So when the penny drops on that, you'll realize that everything out there is gibberish and lies. It's smoke and mirrors until you decide exactly what you're going to do and then stick to the plan, no matter what. Now, I love it when I see all this other stuff out there and hear all these crazy things about whatever. And it's like, no, what's your setup that you make money on? Okay, find it and don't do anything else. It's that simple. So if you miss it one day or you miss it one week, who cares? Are you supposed to go back and engage in just random impulsive trading to catch a move? If you get rewarded for bad behavior enough times, you'll continue to do that. And then on the wrong day, you'll do it again and you'll blow your account up. But on the right days, if you stick to the plan where it's really easy on the setups and the days to make a lot of money, guess what? Trading is a pursuit of pleasure. And if you don't do any damage and you don't engage in random impulsive trading just to prove how smart you are or to meet instant needs, wants, and desires and instant gratification, you can still wake up in the morning knowing that you haven't done any damage, psychological damage or financial damage. And you can continue to work on growing your trading business. So when Furus tell you other things or they want to dispel that myth, I challenge any Furu to dispel the myth of sticking to money-making setups and not being a degenerate gambler in between. It's that simple. Because if you only traded money-making setups, one or two, whether they're trap and shift, pump and dump, trend trades, swing trades, but the exact same criteria met that you have printed off on your wall in your playbook, whether it's a first red day, a first green day template, inside day reversals, inside day coil explosive trend trades, day zero range expansion templates, first bounces after news catalysts, whatever they are. You can trade in any way you want. Market profile, gaps, blocks, sweeps, hunts, soups, runs, inversions, whatever they are. Okay. But if you're trading everything and you're a jack of all trades and master of none, your results will probably reflect that. But if you're a master of one kick, as my friend Steven says, one kick 10,000 times, and you focus on the 90-10 kick, guess what? As long as you don't do anything else self-destructive in between, you can make a lot of money. Richard Dennis says it the best. Traders need to learn to focus on trade setups where they can make a lot of money very quickly and not risk capital on suboptimal trades. That is the challenge. The trader is the variable. The markets do the same things. There's only three things they do. Now, whether or not you're focused on one market and it's not doing anything is another story. Find the setups. Find the setups. Find the setups. And then train yourself. Have the discipline, the wherewithal, the self-mastery to not engage in impulsive, random, degenerate gambling type of behavior in between. Maintain your emotional control. When you stick to the plan and you're only hunting things that you've trained your brain to hunt for, there's no other need, compulsion, desire to engage in other types of trading. When traders shut the door and get behind the keyboard, they do crazy stuff, and then they act like they don't. That's the hilarious, comical part of trading. There's only one thing that's true about the markets. The trader is the variable. The markets are constant every single week. Every single week. So if I can empower you with one thing in closing, know exactly what your A+++ money-making trading setup is, print it out, find 10 of those, whether it's on the same instrument or multiple instruments, print it out, find your A+ setup, print it out, 10 of those, same instrument or one instrument, and don't do anything else in between. And don't let any other furu or, snake oil salesman sell you on having to learn other things. That's your own brain getting you lured into having to have instant gratification now, right now, today, to meet your needs, wants, and desires. What are you looking for? What is it that you're after? Keep things simple, reproducible, scalable, pleasurable, and highly, highly profitable. Keep it simple, traders. If it's not simple, guess what? The retail cycle repeats. Win some, lose some, build it up, blow it up, start again. System jump, blame things external, and keep doing the retail trader dance. Or grow your trading business, make it a pursuit of pleasure, scale it up in size, rinse and repeat, and enjoy your day and continue to grow your business and your life and scale it up in size. Have a great day, traders. Congratulations on a great week. Tomorrow's Free Cash Friday. Whether or not we get a setup, it's a whole nother story. We're in markets now that are starting to consolidate at extremes. 90-10 or nothing at all. Have a great day, and may the markets go with you.